The only difference between a $0 billion business and $1 billion business is the team, not idea. When I joined MSwipe, I was the youngest VP there, and it is statistically proven startups are not great money making machine if you factor into probability. People are really wanting to invest in this, and they are actually investing in this.
Hey guys, welcome to Startup Bits. And today we have a very special guest, a CEO and the founder of Wint Wealth. And we're gonna understand that how he created this company, what are the challenges he faced, right? Each and every part of this journey. So without wasting any time, let's get started. So yeah, hi Ajinkya. Let's start with your brief introduction first.
First of all, thanks for having me. Pleasure to be here. My background, I'm from Nasik, graduated from IIT Gandhi in 2012. So worked at my father's business for a couple of years. Then started my first startup. It didn't fly well, but we are lucky that we got acquired by Flexi Loans. Then did a bunch of gigs at a couple of startups. And then early 2020, I started Wint Wealth. At Wint Wealth, we are basically building a fixed income destination for retail investors. We can speak about it later. Yeah, that's very brief about me. I've been working in fintech space for last 7 8 years.
This Wint Wealth started in early 20s or in 2019 to be very precise. Then I think it's a time of COVID, right? Then how you started this in the COVID period?
Yeah, it was before COVID. I mean, so when we started, COVID wasn't there. I mean, it was there in China, but we didn't know it was coming to us. We started because I've been wanting to start up for long by then. I was ready, I thought, and I got hold of a good idea of Wint Wealth. As soon as we started, in 3 months, COVID came, installed things. Things got delayed, so our pilot, it took us like a lot of time to run our pilot. We finally were able to run our pilot in July, I guess, July 2020, and then formally launch in December 20. If COVID wasn't there, we could have done that 6 months early, is what.
So it's like because of the COVID, there is a pause, right, in the process.
Yes, because like in March, April, everything was locked out. Nobody was meeting anyone, so it was tough to move things, right? And everybody and it was not just normal lockout, right? Everybody was worried what is going to happen. People didn't have experience of staying at home and working, so many people hadn't worked from home ever, right? So there were a lot of teething problems.
So I mean, as we know that for the startup in the beginning, the team is very important, right? Because the size is going to be a very small, not very small, but yeah, it's going to be a few people, right, in the beginning, and that's where we start. So how you created your team, and I mean, how you picked up the guys and all.
Yeah, sure. I personally think, I mean, in tech startups, I mean, ironically, in tech startups, people matter most, right? So, and there is one famous saying one of my angel told me is, the only difference between a $0 billion business and $1 billion business is the team, not idea, right? So, team is that important, right? Like from my last startup experience, it was very clear to me, team is the most important thing. In my last startup experience, I mean, we are good guys as founding team, but we are not complementing each other, right? So that didn't work out well. So it doesn't need to be just good guys, but you have to be also complementing each other for what you are building, right? So when the last startup didn't work out great, I was clear ki team to food banani. So 3 years I spent time building relationship with people, working with people I know could be my potential co-founders, right? And that's how we started building out the team. I mean, the co-founding team. So Abhik is my batchmate from IT. He was also co-founder in my previous startup, and we complement each other well. So we were very clear that we'll work together. Then we got Shashank, Anshul, and Dubey, Vinay, right, on the team. With like where we have worked with each other in past or know each other well, right? Not all together, but at least one of the co-founders. Two of the co-founders have worked together, and we complement each other well, right? And that's how that was very clear, like why we are building this team, why somebody should be on the team, not because he's a nice guy and he's my friend, but he really should make this venture success more probable, or increase that probability by probably magnitude.
Definitely. I mean, getting a compliment, I can understand how helpful it's, right? So in the beginning, the team that you created, right? So what are the roles that you divided?
Yeah. So I mean, like just at co-founder level, we are 5 co-founders. Actually 6. Right. 6th one is still in stealth mode. So we are also very clear that we need not jump the ship. We need not join the ship all at one time. Right. Everybody had joined at different time. Right. So what we are very clear is that co-founder is specialist or generalist. Abhik and I are generalist. Vinay, Shashank, Anshul are specialists. Like, and especially it comes in when there is a clear need. Generalists, you don't need many, right? So that's how we build it. So whenever we knew so Shashank looks after tech, Vinay looks after growth and marketing. Anshul looks after the asset side, the finance side, which asset should be on the platform, which bonds to bring, due diligence, etc, everything, the asset strategy. And eventually, I mean, as the venture progress, I mean, people evolve. Right? Now, Anshul is also kind of moving into a generalistic, like he has developed a generalist capability, right? So, but while forming a team, we are very clear why like this co-founder is joining. What is he going to do? There is an absolute like clear, vertical that he's going to look after and take care of. It cannot be कि ये सही बंदा है आजा फिर देखते हैं. It cannot be कि this is a good guy.
I mean, we are not gambling here and on people, right? Let's add him and then let's see what he can put on the table, right? It's not like that. And what about you? You are a journalist or a specialist. How you joined?
I mean, I'm a generalist, but obviously when you you're running a startup, you gotta be specialist in one, and CEO job is very different. I mean, from 0 to 1, the CEO job is different. 1 to 10, CEO job is different. 10 to 100, it is different. 100 to 1,000, it is different. At every time, it is different, right? What is constant is your fundraising, obviously. I mean, that fundraising mechanism also changed. So that is a specialist role, in my opinion, like raising funds and like getting talent, top talent, right? At least. So these are two constant things. But other than that, it keeps changing. I mean, very early days, it generally the shittiest things that because you want all the team focusing on the right thing, taking care of the customer, building product, shipping things faster, making sure customer experience is great, talking to customer, etc, and everything else that you have to take care as a CEO, right? So then you slowly build founder of a team, and then things keep evolving. I mean, so it is obviously at the core generalist, but there are some specialist skills that and any CEO has to develop.
There's a good point that you said, the funding, right? We're gonna talk about on this, that how to raise the funding, what the whole process is, right? But before that, that we know that you completed your graduation or education from IIT. Then how this IIT helps you in this?
Yeah, look, there is no data as such, right? So it is based on how I feel. Like my general feeling is it definitely helps, not to a great extent, but to certain extent, definitely yes. And that's a feel-based answer, right? I can't really point out at an instance and say if I were not an IITian, right, then I wouldn't have got this. For example, I'll tell you, when I joined MSwipe, I was the youngest VP there. I'm not sure if I were not from IIT, would that have happened? It might have happened, but my hunch is it definitely helped. So I like it's like you don't in life you don't have A/B testing, right? So therefore you have to sometimes go by feel, right? So in some instances it definitely helps, but whether that increases probability of success dramatically, I don't know. It doesn't hurt for sure. That I can tell you, right?
Let's talk about the company, right? As per the company, I can see that they will sell you bonds, right? Or they are just promoting like invest in the bonds because stocks are a bit risky, and in the FD you won't get much interest rate. And there is a middle term which called as a bond. So what this actual the bond means, right? Let's start with this and then we'll go.
Let's say if you take a loan, you have to repay the loan, right, at a fixed interest rate. Similarly, if a company takes a loan, then they take it through bond, right? In bond, they basically issue a share, and that share has they guarantee the repayment, right? In equity, they don't guarantee any repayment, right? Profits are basically shared. Here, the repayment is guaranteed by the entity, and there is some interest that is paid. So it is like FD only. Only thing is if you want to redeem FD, you can't sell it to a third person. In bond, you because it is an instrument, it is a share, you can sell it. So if I want money and the bond matures in 2 years, I can sell it to you, right, if you want it.
So it's like we can sell bonds like stocks, right?
So stocks may you have equity, bond is like debt. Everything else is same. In equity, you share profit. In debt, like you pay the loan first, right? So like debt comes first, but it is low risk, but it is also low return, right? The return is also fixed. Yeah.
So I mean, is there any tax benefit if we invest in the bonds?
Not yet. We hopefully someday soon.
So if someone invests in the stock, they're gonna get a tax benefit. I mean, as compared to bonds, that's what the case is.
Yeah, so there are a couple of benefit in stocks. One is long-term capital gain tax is applicable after 1 year. Plus, short-term capital gain is also about 15% in stock. In bond, it is as per your income tax slab, which is our target group is generally 20-30. So it is not a very like tax friendly as such. I mean, there are some tax friendly bonds, but like these are called MLDs. Market linked debentures, but there is still some level of unclarity, lack of clarity about them.
Right now, I guess the Wint Wealth is only focused on this bonds, right? Correct me if I'm wrong, right? But that's what I can see on the website.
Yeah, bond is kind of our flagship product. We also launch SGB, sovereign gold bonds. So these are bonds issued by Government of India, which pay you as per the gold rate, right? So they are marked with gold rate. And we have enabled that flow in secondary where people can buy those sovereign gold bonds at 5 to 10% discount, which is a pretty big discount if you think in gold terms, right? So yeah, that we have enabled, and we will be enabling more fixed income assets, right? Book your bonds, our own bonds, FDs, debt mutual funds, etc.
The bond seems like a very simple thing, but it's not, right? It's definitely not, because there are different categories out there for the bonds. So I think you're going to cover each and every category, and then let's enable something else like maybe stocks in future we can see.
No, not stocks. I mean, we'll be sticking to different kind of fixed income products. We don't want to go on equity side. So we have done SGBs. We'll do also REITs, fractional real estate kind of things, right? So which is REITs, right? We'll do FDs. We'll do debt mutual funds. So all kind of fixed income product, but not equity.
I can see that you can start your investment as low as, right? I guess the minimum you can start it from 10K, which is it's like any common man can start investment, right? Because you can start with the less money.
Yes. Yeah, I mean, these kind of bonds were anyway available for HNI investors. It's not a completely new asset class on its own. It has been famous in ultra rich people. The ticket sizes were high. What we did is we basically democratized it. We said, no, okay, and like part of it also came from, I knew that these kind of products existed. I couldn't invest because I didn't have that kind of money, right? So I said, can we build it for ourselves? And it made sense. So we started building.
Okay. So I mean, any incident you want to share that, okay, in the beginning, someone pitched or you pitched this idea, let's go with the bonds, and what about the conflicts there? No, let's go with the equity.
No, there wasn't any, because I mean, we were exploring and it made sense from first principles, right? But obviously, I mean, if you look at traditional wealth industry, they believe bonds should not be sold to retail investors. Believed at least that at that point of time. So we heard from a lot of people, retail investors are dumb, they are late to party, and we fundamentally believed that you, like, just because you have more money doesn't make you wise, right? Wiseness in investing and discipline in investing is independent of how much money you have, right? You can be indisciplined even with 500 crores. You can discipline with 500 rupees also, right? So those are independent things, and that's how we took that punt, and we were the first to basically bring out bonds and democratize it. Got retail investor interested in this asset class.
So in the beginning, in this early 20s and all, so if someone, let's say someone is going to start this company, they freshly new, then what is the first thing he or she should do? The first I mean, after creating a team, obviously.
Yeah, I think even team is second. First, you need to decide which game you are playing, right? Are you building a business or a startup? They're two different things,
Okay.
and many people don't realize it. So business is something where you're saying, okay, here is somebody, I can solve something for something, and I will get money, and I'll make profit, right? Startups are basically, you're saying, hey, the world is currently working in this way, but I think it will be much better this way, and I really wanted to see that way. And startup is your kind of execution plan to change the world, right? And it is statistically proven startups are not great money making machine if you factor into probability, right? If you can think like by playing like by buying lottery also you can become multi-millionaire, but probabilistically it doesn't, like, it is not a good bet to play on, right? Similarly with case of startups. So in business, you are very clear. Okay, this is the problem I'm solving, right? And then and this is how I'm going to make money. In startup, there is a business angle. Obviously, you make money, right? Otherwise, you can change the world through politics, through NGO, through service. So startups,
Yeah.
there is a business angle, right? So people have to make money, etc. So you'll make money, but the fundamental thing is you want to change how the world works, right? And the world doesn't change so easy, right? So therefore, your
Yeah.
probability of success is minimal. But if you are able to, the outcome is going to be massive, right? So that's how the bet is stacked. And what people don't realize, they only focus on upside. I will become $1 billion business CEO. What, like, there is a good enough chance that you work for 5 years, even after raising money and you still end up making zero money, right? Because then things don't work out your way. So that is the fundamental difference that people need to first understand and decide which game they're playing. Because the playbook for both game is there and it is very different.
It's like if you are going to, I mean, definitely in the startup there is a business angle, but in the beginning you should not always think about the business thing, right? Okay, I'm going to make this huge amount of money by whatever the factors you can say, by raising fundings and all, or maybe by making profits and all, right? But it's like startups are you are going to make 0 to 1 step, right? It's like you are showing some different direction to the world for particular thing, right? That okay, this can be done in this way. Let's try this thing. I mean, I'm not sure that it's going to be pass 100% or succeed 100%, but yeah, I just want to try it.
Yeah, kind of. I mean, in startups, you go from 0 to 1, 1 to 10, 10 to 100. At least you plan,
Yeah.
right? In business, you say, ki, okay, this is already at 1. I'm just going to make it to 2, and I'll make money on that, and which is a fair and a noble thing to do.
And let's talk about this funding aspects, right? That how to get funding. I mean, because someone is believing on you, right, on your idea, and they are going to give you their assets, right, their money. So for that, how you started to raise funding? Definitely, your previous experience is going to help here. But what about the first experience? If you are the first person and this is the first pitch for funding, right? Then
Yeah, I think people think, like, in my mind, right? When I started, I had commitment of like about 50 to 100K, 100K, $1,000, without telling the idea also, right? And I think that's the right way. Like, you figure out the people who can actually fund you, because angels are betting on founders, not on idea, right? So I had a couple of angels who give me money, who had told me that, okay, I will give you money, even without hearing an idea. And that is possible, and people have to build that credibility if you're going to build a serious venture. If you work at a couple of venture funded startup closely with a founder, he will make sure he will make intros and everything. And from angel to seed stage, startups change a lot and everybody understands it. So everybody's betting whether the founder can take it to next level, and eventually, like, next and eventually, like, really really large business, right? So I think the easiest thing is, it is easiest, but it is also hardest. Like, it is, let me put it, it is simple, but it is hardest. It's build credibility and get funding without you having to tell your idea, right? At least 100K is not difficult.
I mean, it's not possible for everybody, I guess, right? Getting a funding without giving your idea.
No, no,
No.
I'm not particularly saying like you don't have to divulge your idea. I'm saying you
Yeah.
got to be like you have to have credibility with people who can write checks that they will write you check anyway. You'll still discuss idea, get feedback, yeah, but they are just writing a check because they know that you can make it.
Yep. And after that, there are. I mean, after raising the first funding, there are series started, right? What are these series? I mean,
I mean, it's just a fancy name. Like people keep like
ah,
there is a traditionally there is angel seed, series A, B, C, D, E, whatever it is now. Right? So like people should have said this is the second round, third round, but that is another name. There's nothing very complex in that, or nothing very insightful in that per se.
okay. I thought it's well defined structure that okay, this particular company is now in series B category or series C category after some amount of.
There are still benchmarks like so. I think it is like forget the naming, but there is a still like it is a milestone based funding. So angel is basically on founder, right? And bit of idea, exciting idea. Somebody might come because they like the founder. Somebody might come because they like the idea, right? Seed is when there is a large team, good team, founder plus there is like our co-founding team. Then Series A is on PMF, Series B on of like business model, like a bit of scale and some business model indicator. C is a mature business, and generally D say IPO like D वहाँ से either you become profitable. That was the earlier fund. Now things have changed, and they predominantly change. I guess post 2012, post Facebook IPO, uh, and then they went to like really top in 2021, and now we are figuring out where things are going to be, right? But yes, I mean, angel is basically your idea plus founder. Seed is your team plus TAM. Series A is PMF. Series B is growth plus business model proved, and like Series C is scaled business. And these are typical milestones. The another kind of bifurcation comes from investor side. So there are two type of investors even in VC, right? So first is your venture investors and second is growth investors. So growth investors are kind of semi P, so they come after 100 million 120 million plus valuation, 100 below that is venture investors, right? And below 50 is like core venture investors. 50 to 100 120 is a transition period, right? So venture investor is very clear. He's looking for a unicorn. He's heavily betting on power law that two companies out of the 10 he invests will only work, 8 will not work. As you start the climbing the valuation ladder from 50 to 20, that expectation will be कि कुछ और prove हो चुका है. So out of 10 probably 5 will work. After 120 growth में they expect कि every other investment will work, right? And then comes P also, right? So grow, so that there is this transition from investor side, and therefore they look at a different investor will look at based on his stage how de-risk is this opportunity, right? So there is outcome which is a reward, and then there is a risk. So what are the risks that are covered, right? So at angel you are covering founder risk. If you're getting a seed funding, that means the investor believes that you have good team and you are working in a good market. Somebody writing a series A check believes you have got PMF, right? And typical valuation is seed obviously varies, right? Series A is generally about 30 to 50. Series B is about 50 to 100, and C is 100 and above. Is a very typical year. And all this was like all the discipline, all these frameworks were broken in 2021, right? So you will see a lot of deviation from here. But typically this is how the journey of funding is from a startup point of view and from investor point of view.
Nice. I mean, thanks for this detailed information, right? Definitely, this is going to help. In the early 20s, right, you created your product, and after a bit of pause because of the COVID, you launched it. Then, how was the first reaction in the audience?
Yeah, I mean, the response was great, much better than we expected, right? So that was an early sign. So when we are initially saying, hey, this is what we are going to build, will you invest in these kind of assets? People said yes, 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 and we were really unsure, because if you ask a friend or anyone, Like, will you invest in this? They will generally say yes, but we will only know when whether they actually invest or not, right? So that's why we ran a pilot of we brought an asset of just 20 lakh, and it got sold out in 2 days. That's when we knew, okay, we were onto something. We are not hallucinating. We are not daydreaming. People are really wanting to invest in this, and they are actually investing in this.
And so, what are the? I mean, how you picked the tech stack in the beginning? That okay, this is what we're gonna pick, and is it changed now, or still you are continuing with that tech stack?
No, it's same, and right, I don't really have to worry about it. Shashank is one of the one of the best guy you can get, and I'm lucky. We are lucky. We have him as a co-founder, so I don't really have to worry.
I think this is one of the curious or in the beginning, the founders focused on this thing. Okay, which tech stack should we pick, right? Because we don't know that how much scale we have to do in the future. So the scaling is the factor here. That's why I'm just asking. Maybe you decided a tech stack, and after some time you realize that okay, this is not going to work in that much of scale. So let's shift it. Something like this.
Yeah, that might happen, but that's, I think, is a part and parcel of the game. At the start, you're going to make sure that costs are not too much and it survives your next 10x growth. At some point, you change it. That's okay. But I don't I mean, I know that we haven't changed it yet, right? And Shashank has worked in his previous startup, Shop 101, for about 5-6 years, where he joined them very early when they were it was they were just launching, right? So it is as good as a scratch, and then they scaled it to about 1 or 2 lakhs order of a day, right? So he had seen that journey, he know what the tech debt is, how to deal with it, how to take call, when to trade for speed or quality, right? And when to reverse it, when to do sprints, and when to make sure that you give time to clear out tech debt. So he's a seasoned player. So for I don't have to worry at all.
Uh, that's the good part, to have a specialist in your team, right? So I think it's in our imagination or something like this, but are the founders are always busy in something that they don't give much time to their personal life? Is this a case or what? Or it depends that you have to manage both the things like other jobs?
Yeah, I mean, it definitely impacts. There is no work-life balance for sure, right? So if you're looking for work-life balance, don't start up. In general, I tell people, don't start up, right? You should only start up when you cannot not do it. There's a famous YC line. So you should only start up when you can't not do it, right? Because it's not a financially rewarding endeavor. It will screw your personal life, relationship, right? Your leisure time, everything, right? So you should not do it rationally. You should only do it when you cannot not do it. That means you just want to do it, right? After knowing all this, and then you should do it.
I mean, in the Wint Wealth, how you take these big players as your competitor or something like this, like Zerodha out there and Upstocks out there?
Not really. I mean, we think they are equity players. We are a fixed income player, and in fact, Zerodha is one of our largest investor in Wint Wealth. Groww is also our investors. So we look at them more as people in adjacent sectors and not in our core sectors, right? So we know that they are not focused on this. We don't plan to go to equity ever. We think what we are doing itself is a very big market, and we'll stay true to it.
I mean, as you have been a part of multiple startups, right, before this, so all those were a fintech or some in some other category, and then basically how you decided to go into the fintech? Let's go in the fintech.
Yeah. So actually, our first idea was B2B e-commerce, right? And then we pivoted it to an invoice bill discounting platform. So that's how I landed in fintech. I don't have any formal degree in finance. I'm a mechanical engineer, right? And I started enjoying what we are doing, right? So that has been the mantra: do what you enjoy, right? So, and after the last startup, when I joined Cred with it also happened. It happened to be a fintech platform. They were doing interesting stuff, so I joined them, right? And then I was at M-Swipe, where I was heading their merchant lending business, right? So I was enjoying. So, and because you are in the arena, right, you see what is changing. You are what is going to change, what would work. You think that you have hunch, and that's where you start. But it just happened by accident. I mean, out of curiosity, started exploring more, landed up like doing an invoice bill discounting platform. So wasn't planned really.
As we know that the feedback of customer is very important, right? Although your first impression was very good, but what you use to get all those feedbacks? I mean, it's just a form, or how you are collecting the data on this thing?
Yeah, we run NPS etc. Like some of the customers I personally talk to, so they have my WhatsApp number. So if they face any problem, they ping me about 50, 100, right? Regularly we talk to customers and we keep talking to customers. I mean, right? Obviously, I mean, if like, and our NPS is really good, right? And that's what matters in tech business, right? If you're solving a problem and you're making customer happy, really happy compared to the benchmark, he will have a good impression of you. You will be able to cross sell. You'll be able to get more wallet share or something, do something, and that's for the future. I mean, we don't need to worry about it. But what is very important is customers think really high about, like they're really fond of you. You create that customer love. There is delight in, like there is a very differentiated remembrance of being on your platform. That's very critical.
In the end, what are the 2 3 mantras or the factors that you will give someone if they are starting a business and they have to grow, like something like this, like a customer, be customer obsessive or something like this, start your team well, 2 3 important point that you learned in the Wint Wealth?
Look, I mean, this have been said enough number of times by great people. I mean, I don't need to say it again. What I see around myself, at least people who are entrepreneurs, they leave too much stuff for luck to decide, right? And I don't like that. You can go enough prepared. I mean, obviously, you can't really completely take out luck of the equation. There will be still luck, right? But people need to be prepared. People can be prepared a lot. People need to think a lot, and they can do a much better job, right? Like people starting up without thinking, how will I raise my next round, first round? I mean, right? Without having talked to, without under, and what people don't understand is they think every startup is different, so therefore my startup is going different. It's not that. I mean, the playbook is defined. I mean, startup is not yesterday's phenomena. One of the, like even Microsoft and everything was about 40 50 years from now, right? Back there have been startups, there have been playbooks, like how you solve problem, right? In coding, let's say there is object oriented programming, these are all playbooks, mental model, algos, whatever you call it, right? So there are playbooks, and you can get hold of those playbooks and then play that game, right? So people don't focus enough on understanding playbooks. They just think that they will go and play and see what happens. That's okay if you're doing something casually, right? But when you start up, you're investing your time, wealth, right? An opportunity cost is huge, right? So you got to be knowing playbooks and then play according to it, and then innovating on that, rather than reinventing the wheel from start. That I see a lot of people not doing well. They think that, okay, startups are different, unexplored, so I'll also do it that way. Your core idea is unexplored, but how to raise funds, how to hire, right? How to pitch, how to manage runway. All these are obviously very solved problems, right? There have been great suggestions out there already on YouTube and etc. Right? And people don't spend enough time understanding them, like solving, like, and working on it, which is a cause of worry, I think.
Last couple of years in India, there are a lot of startups, right? Then what's your take on this? I mean, is it good, or the people are just starting companies just sake of being founders and just add a tag on them that, okay, I'm a founder of this XYZ company? What's your take on this thing?
That will happen in anything which like anything that gives life changing outcome, or say like larger than life kind of image outcomes. There will be a lot of people pursuing it, right? Even today there will be a lot of people who would go to Mumbai and say that I want to be a hero in Bollywood, right? and only probably out of 10,000, one or two will make it. That's how the probability is, right? And but still 10,000 people will turn up, right? Even you see today, and not just Bollywood. I mean, if you look at UPSC preparation, right? How many people actually take the exam versus how many people actually make it, right? Those percentages are those probability are absolutely skewed, right? So anything where the outcome is high, the probability is going to be low. But still a lot of people will try it, right? Because they think, and they think they can increase that probability, and there are playbooks to increase that probability. What we are doing is also that, right? So that will happen. I mean, that's part and parcel of the game. And unfortunately, some other people would not understand depth or difficulty. They will jump into it for the jazziness of it. They'll burn their hands and they will become wiser. I mean, what else can like you do, right?
You learn with your failures more, right? Thank you so much, Ajinkya, for this call or for this discussion. We definitely learn a lot, and I'll suggest all my viewers to go on Wint Wealth. They are this is I guess one of the best platform out there to invest your money in the good way and create some wealth, right? So if you're new to the channel, just subscribe it, like, share, and comment. Take care. Bye bye.